flavor for your ear. Epic Spotlight. Putting the spotlight on positive goings on the real people that have chosen a real path. The who's, the whys, and the hows are being shared and given to you.
And we got another one. But before we get going, we got to take care of some housekeeping notes. Today's episode is sponsored by Epic Mortgage. Whether you're buying, refinancing, or investing, call Epic today. That's 708-905-5300. That's 708-905-5300. It's your dreams, your goals. Let's plan together. Now on with the show. Today we have Chris Panagiotu, the visionary behind Capitalize Your Finances. Chris started investing at age 10, and by 18, he was interning at UBS. After graduating from the University of Oregon, he briefly joined Morgan Stanley before finding his true calling at Lucia Capital Group in 2015. There he grew his practice from $0 to nearly $100 million in 7 years. Chris is a certified financial planner professional and a chartered retirement plan specialist with a Series 7 and a Series 66 license, named a 5-star wealth manager by Seattle Times in 2020. Chris is an original capitalizer dedicated to excellence and unwavering commitment to his clients and community. Outside of his financial work, Chris hosts his own podcast, Capitalize, serves on the board of ACE, supports his Oregon Ducks, and enjoys time with his wife, Stephanie. He credits his success to his faith in God. Welcome, Chris.
Hey, man. Thank you for having me. It's a pleasure to be here, and wherever you decide to take me, I'm along for the ride.
That's awesome. Well, let's start at the beginning. Obviously, starting investing early is something that's intriguing to me. I'm trying to, do that for my kids. I have a 10-year-old at home. So, how did that start? Were your parents involved with that decision? Take me from there.
Yeah. So short answer is yes. I have no relation with my father anymore, nor do I desire to. He was an obsessed, like devout Warren Buffett follower. And so growing up, but I was never taught any of that stuff. It was just kind of mentioned throughout the day. So when I was 10, what ended up happening was right before I turned 10, Starbucks was exploding because we're in Washington State and it was everywhere. Okay. And I remember my mom had a Starbucks coffee or whatever. And the smell, like there is nothing more nostalgic than a nice, awesome cup of coffee. And I remember my mom set the cup down, and as a kid, you're not supposed to drink coffee. And so she said, don't do that. And naturally she went around the corner and I was just drawn to it, took a sip. And then after I was, verbally shafted, I recognized very quickly, whoa, like I want to be a part of this. And I thought owning the business was like, I have this cup of coffee, therefore I own the business. No, that's like the farthest thing from the truth. But my parents knew that I was interested in it. So at the age of 10, I was gifted the book, The Intelligent Investor by Benjamin Graham, who was Warren Buffett's teacher at Columbia University. And people think, oh, you're some savant. I did not absorb hardly any of that book. But I did understand that you need to buy businesses that you understand and that you think are going to be around for a long time. Now, you fast forward today, it's a lot more complex than that, but that's actually how I spurred into buying Starbucks, and Microsoft is my first two businesses. Starbucks, It was my mom and all of my other friends' moms were drinking Starbucks, and they were everywhere locally. And then Microsoft, people assumed, oh, looking back, of course you were this genius. I really wasn't. I was a huge gamer growing up because of my Crohn's disease. I wasn't able to go out and play with a lot of my athletic friends. And I'm extremely extroverted, so I wanted to have more friends. And so all of my buddies that were introverted were playing Age of Empires. And Age of Empires was on Windows 97. And so I thought, oh my gosh, everyone is playing video games. Everyone is playing Age of Empires. Microsoft is the only company that allows me to play it. I'm going to buy it. Like that was my in-depth analysis. Now, what was interesting about that was my birthday is May 31st. So when I was 10, that was 2001. That was right before everything took a dump with the dot-com crash.
Sure.
So, my whopping college savings that my grandparents set aside went from $1,000 to like $400. But then I remember being told, maybe you need to go reread the book, like The Intelligent Investor. So I reread parts of it. And I thought to myself, oh, nothing really changed with, in particular, these two businesses, other than there's a lot of noise right now. But like the numbers didn't lie. And that's when I started understanding, oh, like if a company keeps increasing its revenue and profit, it doesn't really matter what's going on in the news. In fact, it literally means nothing. I was blessed with the kick in the teeth early on, and then realizing that you need to set your emotion aside, because if your emotion gets involved with the world of investing, you are going to be royally screwed. I didn't really learn what is now capitalizing your finances until years later, but that's to answer your first question, how I got started.
Yeah. No, I appreciate that. It's always good to kind of have an idea of just where the baseline was. But then,
Yeah.
let's go further. So, where did Capitalize, where did that whole idea, because, you're the captain of Capitalize.
Yeah. Yes. Being the cap and capitalize. And I know you mentioned in the intro, so I was, it's funny. So I was actually the youngest advisor in the world for UBS at 18. And then I went to Morgan Stanley, and I've been recruited by the big firms and all that. And I learned in great detail what not to do at these big firms. But I didn't have the verbal ability to describe what to do. And so when I left Morgan Stanley, and it takes about 30 days ish to transition your licenses over from place to place. And I transitioned to Lucia Capital Group, which later I spun off and created Capitalize Your Finances. And Lucia has been great. I mean, they're family friends to me, and that was much different than leaving the big firms. Let's just put it that way.
Sure.
But I had 30 days where I can't really do anything, and so my apartment was right next door to the University Place Public Library, and so I said, "Oh, I'll just read a book a day on planning, and I will find the Intelligent Investor equivalent of planning." Because there's a huge difference between financial plan, like actual financial planning, and just investing. And I'm not degrading investing as just investing, because it is complex, but it's not as complex as people think, but it is a different mindset. So after 30 days, I quickly found out, oh, there were bits and pieces of things that I could add to my practice, but there wasn't the Intelligent Investor equivalent. And then it took me like 5 years to realize, oh, there isn't one of these out there. And that's why I decided to eventually write the book. But I knew early on people were not going to believe a 22-year-old kid saying, hey, I've worked at the two largest firms in the world. I know it doesn't work. Like, trust me with your life savings. And yeah, that's a tough sell. And they're like, oh, where's your office? Well, I'm renting a kitchen. Like, because for the first 2 years, it was a makeshift kitchen that me and my teammate were out of. Now it's a little bit, it's a totally different world. And so it wasn't until 2020 that my framework really started to take off. And then 2022 was the icing on the cake, because the market dropped, and our revenue to our business grew by like 28%.
How did you really kind of have that confidence within yourself? I know you're an extrovert, like you said, but it sounds like you really have that confidence, because to be younger, and I do remember those days, and I'm trying to tell people how to deal with their finances. That's tough to do. That's not easy for everyone. So what was it in you? Just a confidence overall in you, or?
The real answer was when I was 4, I was diagnosed with Crohn's. And I remember the doctor coming in and telling my parents, basically, with Crohn's disease, like, you're not going to be able to do a lot of things that normal kids will be. Like, you'll have stunted growth, you won't be as strong, you won't be able to play in sports, all that fun stuff. Well, you don't have the vocabulary or understanding at 4, but I had that gut feeling of, no, like, you're wrong. Like, I'm going to prove you wrong. And I did that, and you fast forward that, that same gastroenterologist was at my first bodybuilding competition.
Wow.
And so, and then I did powerlifting in college. And so, at an early age, I was told no. Now there's a difference between like, hey, don't do that, and you you just won't be able to succeed like everyone else.
Sure.
And when I was told that, now granted, and we talked about this before we started, like I owe a lot to my faith with that. Because I easily at 4 could have just said, well, I'm just never going to be able to do anything, you know. But I guess I had that. And that's a huge blessing. And I know that's very, very rare. But then you took that mental model that I had of no when I was younger, and then I got healthy, and then I got into powerlifting and bodybuilding. And then I took that mentality and then I applied it to my business. And then I took that mentality of, people saying I can't do it. And then I applied it to my podcast and my first book and my second book, which comes out in December, approximately this year. And so for me, anytime someone tells me no, like that, I've got so many mental models in my head. Now I'm not cocky and arrogant about it.
Sure.
Like I know what I don't know. But at the end of the day, I can't fail. Like I won't allow myself to. I'm not saying I won't succeed, but I will do everything in my power to make sure that that person that basically said, you're not going to be able to do this, they may be right to a degree, but they're not going to be totally right.
Your story is motivational to say the least. And I think, and I resonate with that. I mean, obviously I'm a shorter stature. So, I've heard that in the sports arena of no, no, no. And I do like proving people wrong. And, I do accept all doubters. So no, I definitely understand that. What also must have helped was just you investing at an early age to getting going. So like, what are some things like in the 20, like, hey, I'm 20 years old. What are some things that I should be looking into as far as investing?
Well, and I'll tell you before I answer the 20-year-old question, because that's a great question. We actually just made an episode on what to do with and how to capitalize your finances in your 20s. But the portfolio that I had to cash out when I started my business. And now I'm going to say if I didn't have that, in the long run, I would have been fine. But in the short term, man, that would have sucked a hell of a lot more than it already did. The closest I got to closing down was August of 2017. I had about $11 left in my bank account. I remember the meeting. If I did not get this client, I was going to have to close down. I would have to let my teammate go and figure something else out. But obviously that didn't happen. So that's a little caveat. As far as like what you need to do with in your 20s, honestly, get the easy financial wins out of the way. I know it sounds boring and cliche, but boring is brilliant. And we're all about capitalizing, right? So capitalize your checking account, have 1 month of expenses, capitalize your savings account, 3 to 6 months in savings, depending on your situation. And then by definition, above and beyond that, anything that you have, you should not have it just set aside. You should be utilizing your company retirement plan, or if you run a company, you should start one for your business, not only for your employees, but you get a tax deduction for it. If you're an employee and they don't have a retirement plan, you want to start like an individual retirement account or a Roth IRA. I know I'm giving pretty broad advice here and I get really granular and into the weeds, but basically, if you're in your 20s, once you have your cushion set aside, by definition, you should be automating everything above and beyond that to the future in some vehicle of a retirement plan. Because one, if you have a company 401k or retirement plan, you don't have to pay for it. They pay for it. The investments are actually going to be cheaper because they're wholesale pricing. Think of like buying in bulk, go to Costco. You go to like Walmart or your mini mart, if you just pick up one thing or another, that's like an individual retirement account. It's going to be more expensive because it's custom to you. So until you max out your 401k or you're able to, don't think about investing anywhere else. Just keep it simple, keep it lean, and keep it mean.
I like that. And I like capitalizing too, because it makes me think offense. There's people out there, gurus that are so defensive minded, like, here's my pie, this is all I have. And I like the concept of looking into saying, hey, how can we maximize this? How can we capitalize on the markets? And markets change, obviously, from what would you say, quarterly basis or year to year, or what would you say?
There's two ways to answer that. The surface level answer that most people are looking for is quarterly or annually or daily. All of that is true. What I would say for a more appropriate answer is if you're asking that question on how much the market changes, you're thinking about your finances wrong.
Hmm.
And I'll tell you why. So you own a business, right? You run
Yes.
your business. Okay. Now, obviously, you're in a very volatile business right now with mortgage, but you wouldn't have it any other way. Like there's no the what crosses your mind is not, okay, well, if this changes in a month, I got to dip. I got to dip out of this industry. Okay. Now, desperate times call for desperate measures, but we've had conversations. I know you're rocking and rolling, right? You're
Sure.
you're of the esteemed mortgage royalty. So my point is, as a business owner, you don't have an option of just giving up. And when you're trying to invest in plan for the long term and you're looking to allocate money towards investments, whether it's funds, the individual stocks, real estate, you name it, you should have the same mindset that a business owner has when it comes to owning it, meaning you should have the plan of owning it forever with an asterisk. If something materially changes within one of your investments, that forever becomes a never, and you got to move on. So think of it like a sniper. Snipers can be in the forest for, hours, days, months, just laying there. I don't know if you watched American Sniper. Freaking awesome.
Good movie.
Uberly patriotic show, right?
Yeah.
Or movie. And, Bradley Cooper's sitting there for hours. And I mean, literally just pisses himself because he's sitting there for so long. And then after whatever it is, a day or two, he finally has to take that shot. It's kind of the same thing, minus, defecation.
Right.
It's kind of the same thing with money, right? You want to have your finger on that trigger for as long as you need to because you are watching that investment like a hawk. And the second it tells you that it is going against the thesis of why you decided to invest in it in the first place, you pull that trigger. But sometimes in most cases, you may not pull that trigger for years, and hopefully you never have to pull it like at all. But you've got to fall in love with watching paint dry. You also have to realize that that paint's not going anywhere.
Oh, that's
So
awesome.
yeah,
I like that. Just to put it in, thinking about watching paint dry. There's such a psychological, you know, movement that has to happen because human nature, like we see something going down too long, we just want to, must get rid of it. And there are ups and downs. There's cyclical. There's a lot of things that can happen. So that's interesting. So now we talked about the 20s. Now let's take me up to someone that's in their 50s and 60s. Sometimes, you feel like to really see a true increase in investing, you need 20, 30 years or so. So if I don't have that 20, 30 years per se, maybe I'm 55, 60, what advice that would you recommend for someone in that nature? What should they be looking to do?
so you're saying someone in 50, like 55, 60 that really has nothing.
Sometimes some people just go in life and they just, life is passing them by. And before you know it, in a blink of an eye, they're 55 years old and they start assessing, their personal savings. And it's like, man, I don't have enough. And it's like, okay, now what do I do? I mean, is that where, are we looking at real estate per se, or are you recommending that, or can we take advantage or capitalize in the stock world?
Your plan is going to look exactly like the 20s where you have nothing because a zero is a zero regardless of how old you are.
Sure.
And so the principles remain the same. Now, your question was toward the end, you even threw in the curveball of, okay, do we go real estate? Do we go market? Do we go whatever? So the simple answer is stick to your guns, no different than the 20-year-old. Company 401k, IRA, Roth IRA, etc. Now, how do you invest within those is where you were going with. Now, most retirement plans through a business, it's going to be invested within the market. So you're going to be investing in publicly traded businesses and you don't really get control of that. But what if you had all the control? Where would you go? So in my book, in my course and all of that, and in my practice, for crying out loud, I am not an either or. I'm very much an and. And I talk about the endowment model ad nauseum. It is the number one way to statistically grow one's net worth. And it is utilizing publicly traded investments, private equity, lending, venture capital, private credit. You could utilize, hedge funds. I'm not saying you've got to do all of them, but there's so much out there that you can utilize. So in 2016 and 17, I actually started utilizing real estate within my clients' portfolios because no other advisors were doing that. And then I started to recognize, wait a second, something's not adding up. Now, granted, we didn't have any clients get hurt with it by any means. Like real estate has done very, very well. But in this industry, and really any industry, but especially with planning, you have to consistently be a student of the game. And anytime you think you've heard it, you're going to be humbled so hard, you are going to be mortified. And I bring that up because I've always been a student. That I will say is one of my strengths. I don't stop. So in 2022, I read this amazing book called Where the Money Is by Adam Cecil. He's been on my show. And this book it's a world-renowned investment book. And there was a chart in that book that blew my brains out, and it proved the guttural instinct that I had on, no, businesses are going to be the way to go. So the average real estate holding will grow at approximately 4% over time. And we're talking over 50 years. Okay. Now that doesn't include income. Okay. Does not include income. So let's say you're getting, another 4 to 5% for income. So you're in the 9 to 10%. Great. And obviously inflation is what it is historically. And you're not earning a lot on cash. But then the average business is going to grow way more than real estate. Let's face it, you can control it. So with real estate, you can go and remodel, you can add on, you could subtract from the home, you could develop the land differently, whatever. At the end of the day, you can only truly control real estate relative to the other real estate around you. Like if I lived in the friggin' hood, which I don't, and I built just a ballin' ass mansion, I'm still in the hood. So
Right.
It's not going to be valued all that high relatively. Versus if I lived in a friggin' honey bucket in the Beverly Hills, that's going to be the most expensive honey bucket on the face of the earth. But I can't control that. With a business, and you and I get this more than anyone because we're running it, you have ultimate control. And so I thought to myself, whoa, that's intriguing from an investing and planning standpoint, but then also just taking a step back from an entrepreneurial standpoint. The most successful people out there, assuming they haven't inherited the money, okay? The most successful people out there have self-ran brilliant businesses. Brilliant businesses. And I'm not even talking like the Bezos or Elon Musk of the world. I'm talking like, man, if you run an HVAC company, holy smokes, they make a lot of money. Or if you run a car dealership, or if you run a waste management company or something like that, boring, reliable businesses. Now, where real estate people get a little confused is they go, no, but I've made my money off real estate. No, you haven't. You've made money off the real estate business that you are running. Like you're a real estate agent, you are in the business of real estate. You are not in the investment world of real estate. You are in the mortgage business. You are not in the investing in mortgages business. There's a big, big difference. So to answer the question more comprehensively, you would want to make sure that you have a core holding or holdings of amazing businesses, whether it's mutual funds, individual stocks, index funds. I really don't care. I talk about that in my book. Investments come and go. Strategy remains the same. But then over time, if you want to, you can get more creative with what we call satellite strategies. So private equity or or real estate or lending or all those other alternatives that I mentioned.
That's great. That's awesome. No, thanks for that. And then, as we wrap this up, can you talk about the books? Obviously I want to, the book that you currently have, and then obviously the book that's coming out in December.
Yeah. So Capitalize Your Finances was my first book, or I guess it is my first book, because it still is. And basically what that book does is it took my framework of what I do for clients, and I've basically democratized true comprehensive planning to everyone. I mean, it's a $19 book. Okay.
Right.
I'm not retiring off of this book. I'm a firm believer, and we were talking about this earlier, because right now our practice, we oversee about 140 million. Our minimums are $500,000, and our average client's worth about 3 million. So, I'm well aware that most people don't have that. And so I could have said, hey, I'm just going to keep compounding for myself with my podcast and my book and my speaking engagement, my courses. That's my way to give back. Now, you got to pay for it because let's face it, I got a daughter at home who's 18 months and those little suckers are expensive. Okay.
Yes, they are.
But, but it is what it is, right? Because I know the price that you're paying for me is pittance in comparison to the value that I'm given.
Sure.
So that's my book, Capitalize Your Finances. It's my framework that I teach, I live by, I abide by, and it is for you. Now, my second book coming out in December is Capitalize Your Sales. So it's interesting because a lot of these people out there are talking about, hey, what do you need to do when you've made all this money? But very few people know the art of truly raising money, meaning going out and selling themselves. And so what my book, Capitalize Your Sales, is going to do is it is going to take you from my apartment to $1 million business, because we're going to hit $1 million in revenue this year. And how did I do that? And how can you apply that? And it does not matter what business you are in, whether it's mortgage, CPA, attorney, car dealership, HVAC, plumbing, you name it, the list goes on and on and on. I will basically teach you everything I learned, from eye mirroring to voice mirroring, to body movement, to filling your calendar, to transitioning from a salesman to a CEO of your financial fortress. And then at that point, once you get to that stage, that's when you learn to capitalize your finances. So in the new year, my social media team and I, we're actually going to be talking to businesses, and we actually have a litany of them right now where they fly me out and I coach the staff on how to capitalize on their sales. And then I turn around and teach them how to capitalize on their finances. Because it's one thing to make a lot of money. It's a whole nother ball game to be a steward of it. And frankly, I'm the only one out there that's doing both.
That's awesome. All right. No, that was great. No, thank you so much for coming on the show. Definitely wanted to spotlight your businesses and obviously your books and what you're doing. And like I said, I love that offensive mindset that you have. And definitely want, Chris, you have an epic day.
Awesome, man. You too.
All right.
The who's, the whys, and the hows are being shared and given to you. Epic Spotlight, baby. A new flavor.